Okay then, welcome back ladies and gents for another YouTube video, Allincrypto here, and today we are going to be dropping another jam-packed daily cryptocurrency market update. And as always, if you are new around here and finding yourself on my channel for the first time today, don't forget to check out that subscribe button because we drop an update just like this one around 1 PM UK time every single day to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. And a quick announcement, in the coming weeks, maybe months, depending on how things go, we are going to be turning these daily market updates that come out around about 1 PM into live streams so that I can interact with you guys and girls on more of a kind of level, I guess, something that we really want to do. But we've got quite a lot to get into. Today's a big day. We've got CPI in the US. Markets have kind of ran into a bit of a stall box because you've got oil doing well, you've got the dollar, which is very correlated with oil, seeing strength, and that's really leaning on risk. And crypto being the kind of like hypochondriac of markets, the really high beta risk play is kind of volatilely reacting. But I'm here to tell you that I believe everything is okay. This bull market is really very much still intact. And we don't just get that from everything that we're looking at technically in regards to the crypto space, but we have a real 360 analysis on the market. So I'm going to be sharing a little bit of that with you in this video, certainly in regards to inflation and the fears that we are seeing, because actually CPI is only one side of the inflationary story. We have things like core CPI, and we've got PCE that we're going to be looking at that paint a slightly different story to the one that's sort of plaguing markets at the moment. But we will talk about that. We're going to look at the dollar with oil, and we'll look at how that's leaning on Bitcoin and kind of show that from a technical point of view. And then we're going to be looking at the Total 2, which is our favorite cryptocurrency chart, and talking about an Ethereum ETF and the will it, won't it get approved. We're seeing 2x Ethereum futures getting approved and lots of filings for those. Kind of doesn't make much sense that an Ethereum spot ETF, which would be arguably a lot less volatile and risky for investors, doesn't get approved. But we'll talk about all that as we proceed. Let's start things off with, of course, what is happening today in regards to CPI. So this is a CNBC article, and it reads, a crucial report Wednesday is expected to show little progress against inflation. Well, inflation was in the United States 9%. It's now down to 3. The expectations for this one are 3.4. And you know, I personally think that that's progress. And actually, it's continued progress in regards to core CPI, which you're going to also get today. Now, today's pivotal. It's likely why risk is adjusting a little bit again today, certainly crypto, because going into this, people will hedge their bets. People will take risk off the table. They'll take positions off because they don't want the volatility and they don't want the markets to kind of throw a temper tantrum and then be caught on the wrong side of that. You can take that from a leverage trader like somebody like myself. Most people shouldn't be touching leverage when it comes to crypto. I really do truly believe that. And actually, I do better in the stock market trading it than I do crypto because of the leverage element, which is an interesting one. I'm sure some of you can relate to that. But today is going to be very pivotal. This whole oil going up, inflation not coming down at the same rate and kind of, you know, shaking around a little bit is really calling into question rate cuts and the probability of us having 3. Now, I'm sticking with 3. We were against the 6 or 5 that people were looking at going into 2024. We said that's not going to happen. They're not going to cut in March. It's going to be later on in the year because they don't need to because of really good data like GDPs and things like this that we're getting. But with this kind of stall box, markets just hate uncertainty. And this is why we see the dollar doing well. And of course, on the back end of oil. And of course, today you do have, you've got CPIs month on month. Obviously, year on year is the big one. The expectations of this are 3.4. The prior one was 3.2. But you also have core CPIs, which are actually expected to drop. Now, CPI year on year is only one side of the story. If we look at something like United States core inflation, yes, it's not at 2%, but it's at 3.7. The prior one was actually 3.8. So there is a continued drop in this. And I think the Fed are going to have to accept, and the backdrop for this is they're going to have better than expected economic forecasts, higher than expected inflation. Certainly if that labor market stays really tight, you can kind of say, okay, well, maybe not 2% is the norm. Maybe it's 3%, roughly where we are. And actually, I think that there's a number of things that we look at in the markets that signal this. Remember, we're still bullish on bonds. That's that liquidity cycle and what sees it coming through. That money is likely in that liquidity is likely going to come from a number of places. One of them that people aren't really looking at is money markets. People are stuffed to the gills in regards to money markets, which essentially are just treasuries. Right now, you can get up to 7% on just money that you put into a money market. That is basically buying treasuries. That, when rates come down like we expect them to do, is going to flow back into risk because there's going to be a hunt for yield. But that's for another video. So to focus on the topic at hand, even though we've got what is looking likely to be 0.2% higher inflation on year, core is still coming down. And actually the big one for me, which is going to come out towards the end of the year, but is probably the thing that I'm most focused on, and probably the Fed is as well, is PCE, annual change. And this is showing that you're essentially at 2.3%, which is basically the Fed's target, and the prior one was 2.8. So this is a continued change now. So again, even if we look at the charts, which we're going to do now, let's not use what I want to show you on the Dixie with oil, and of course we're going to bring Bitcoin onto this. Let's use the total two. So we're going to show you something interesting on the total two in regards to this right shoulder and a potential pattern. Today's going to be pivotal and could see the pattern either fail or complete. Let's show oil. So oil's gained a bit of strength, leaning on markets. Again, this is the correlation with obviously the Dixie is in the Japanese candlesticks, oil's in the green. Should have sort of maybe done it the other way around. But it's not the whole story for inflation. So this is nat gas. This is wheat. Coffee doing very well and things like that. But I'm not worried about inflation at this point. I think markets, certainly crypto, it's like a hypochondriac, sees blood and it faints, or any kind of uncertainty, it bears the brunt of. And this is part of what we try and do here, is quieten down that noise and give a broader plan on the markets, that we're not fussed about short-term volatility or uncertainty. We are if it turns into more longer-term uncertainty and there's real cause for concern. But a slight blip in inflation, and one element of inflation, we're not worried about. We're not actually in the higher rates camp. We're not in the super spike on rates. We're in the basically soft landing camp. And we've been in that camp since we got back into the markets at the start of 2023 and done very well as a result of it, certainly in crypto. And I think we've still got this real good road ahead of us. And I don't want to go too much into that. So this is kind of just one side of the story. We know that this is leaning on risk right now. So the dollar and oil are obviously very correlated. Well, why is this? Well, the dollar strength has really come from oil going up and thus inflation going up, and the Fed's reaction in regards to being tight and upping interest rates, which increase the sort of burden on the dollar. We know that, and it's kind of leaning on Bitcoin right now. But Bitcoin has been doing quite well and is going to continue to do well. So let's dive into Bitcoin now before we talk about a little bit of Ethereum news. We still have this big sort of time view for it. There was a bit of a wind up that you've kind of come back into, and that's probably most notable, maybe on a smaller time frame. Doesn't mean that this isn't going to continue to perform, and today's going to be pivotal. Remember, we've got that 151,000 price prediction for Bitcoin. The more interesting chart for me, certainly as somebody that's more into altcoins, like I'm sure many of you guys that follow me are, is total two. So we're saying, and we'll get laughed at, just like we've been laughed at on loads of different calls that have eventually gone on and made target. We don't see those people in the comment section anymore. Good riddance is really the only thing I have to say to that. But we're looking at this right shoulder. And if this forms, you're potentially looking at a $3.7 trillion cryptocurrency market, which is over a 3x from where it currently is. It aligns with everything else that we're looking at. And actually within this right shoulder, you may get a closing of it and a completion of it on the back end of this symmetrical triangle. I think this looks quite likely. And I think with today's CPI, what you might have is the market's just looking at them and saying, let's just get this over and done with. Give us the number and then we can get back to normal and worry about the next one that comes around. And in that time, you're going to have things like PCEs. You're going to have lots of data that I actually think is going to be quite supportive in regards to the inflation narrative not being an uncontrollable one. So there's a lot going on in the macros. What we try and do here in crypto is people just have their crypto blinkers on. you need to look elsewhere sometimes to try and explain what's going on in your industry, because crypto is now finding itself in the kind of synergy of markets, in the kind of unity of markets, and it's moving with them. And it's being affected by the same variables that they are. And this, I think, is where we really differ from a cryptocurrency channel, because we can do both. We can put crypto hats on, we can put other hats on. In fact, one thing that I'm actively trading right now is coffee, Japanese stocks, and metals. But I'm a crypto, all in crypto. I'm passionate about this industry, but I'll trade markets more broadly, and we try and correlate all that on this channel. So I think you can have a pivotal day. I'm actually more positive about all of this than negative. It's not going to be too long. There's nothing really being invalidated as far as we're concerned from a technical point of view, and our kind of bigger term theory really does stand. I did a great update for the Patreons yesterday where I actually look at the Dixie chart and Bitcoin 4-year cycle, and there's a correlation there, and actually what we're predicting for the dollar kind of is signifying that. Let's talk a little bit about Ethereum. So you are going to get an Ethereum ETF. It's going to happen, in my opinion. And I don't think that because of the kind of macro LARPins. I think that because of what we're looking at. So this is kind of interesting. ProShares has filed for a 2x and a 2x spot Ethereum ETF, and it's filed as 40 Act because they don't actually hold either, but rather use swap contracts for exposure. This is exact filing, SBIT, and that was allowed to launch 75 days on schedule. Vanex saying you're not going to get it in May. Not fussed whether you get it in May or not. You also have new investors coming up with like 2x MicroStrategy short. Bit of people. I'm not the biggest fan of Michael Saylor. I think his arguments about how many chairs he sat on is ridiculous, because you're likely to sit on multiple chairs throughout a day. And not everything is Bitcoin. You can be a Bitcoin maximalist in saying Bitcoin is the store of value cryptocurrency. I am a Bitcoin maximalist on that front. But for you to dismiss every other distributed ledger, I mean, what an idiot, and he's not an idiot, and Hal Finney himself, the guy that most people think was Satoshi, I happen to think there's a lot more nefarious reasoning behind it, said that actually Bitcoin is a global ledger and there's many applications for that outside of just a currency. So we agree with Hal, rest in peace. So yeah, that's really all I've got. On that Ethereum note, let's just finish on that. ETH BTC. This is going to be a massive breaking pattern that's going to see Ethereum do very well against Bitcoin. That's going to come on the back end of Ethereum news and ETH DOM. When it walks, talks, and quacks like a duck, you're having duck for dinner. Hopefully with some pancakes, some cucumber and spring onion, and some hoisin sauce. Anyway, that's all from me, guys. Let's see what the day brings. Just stick to the broader time frame. Don't get suckered into these beta males on YouTube that are talking about, you should worry this, that, just based on really short-term time frames. There's no need to be suckered into that whatsoever. Have a bigger plan. Understand the broader trends of markets. At the moment, we're deriving courses to actually help people understand and to not just understand, but really harness and be able to technically assess a market for themselves and kind of give them what we believe is the cheat codes to markets. Well, that's all from me. I'm wishing you all a wonderful Wednesday. On that note, I'm going to love and leave you. Thanks a lot for watching. I'll see you all in the next one.